Okay, so last section of slides and problems, we went through how to figure out depreciation. And now we are going to look at things that have to do with expenses regarded to assets, and then how to dispose of assets. And I had already mentioned this in a previous section that we went over, but when we buy an asset and we're looking for the cost of the asset, that's where we come up with, if we buy a van and we're painting and lettering the van, the cost to paint and letter the van is part of the cost of the asset, because that's what we need to do to get it started and get it running. But if it's something that we do after we own the vehicle, then that's just ordinary repairs, and you're going to have an account that's called repairs and maintenance expense, or maintenance and repairs expense, or repair expense, or maintenance expense, something like that. You just look at the chart of accounts for your problem, and it'll tell you what it is, repair or maintenance, or repair and maintenance. Okay, and that's going to be things like tires on a truck, or oil changes, or replacing a carburetor, or if you have the truck repainted down the line, or things of that nature. Okay, if it's a big ticket item, a big ticket item, I had talked about before about how we had a building that the roof had to be replaced, and the roof was hundreds of thousands of dollars, and because of that, we ended up depreciating that. We added it to the cost of the plant asset, and we depreciated it separately over the life of the asset, because it had a long life to it as well. You're not going to have any problems where you have to deal with that, where they like tell you, oh, you replaced an engine in this car or something. You're not going to have to deal with that. Okay, but you will have something that'll come up that'll have to do with the maintenance piece. Okay. All right. So impairments. So impairments are declines, like when you have an asset that declines, and it no longer has the revenue producing ability that it used to have. Like, for instance, you have a truck and somebody drops a forklift pallet on top of it, and so now you can't deliver with it anymore. You could use it for short errands, but the bed on it's all messed up and you can't deliver with it. So the company would write down the asset to its fair value. You will not be doing anything with that as well. That's not something you'll do. That's just like for your FYI for you. Okay, so now we're going to talk about plant asset disposal. All right, you will do problems in your homework and on the exam that have to do with plant asset disposal. So there's 3 different ways we can get rid of a plant asset. One is a sale of a plant asset, and that is where equipment is sold to somebody. You sell the equipment to somebody else. And when you sell the equipment to somebody else, what you get in exchange, we've been calling it cash, right? We say, oh, well, we get cash in exchange. Well, we do get cash in exchange, that's true. But when we're talking about plant assets and we're going through the problems and we're learning how to figure the problems and everything, we are no longer calling it we're no longer calling it cash, we're calling it proceeds. So the cash that you get are called proceeds, and that will come into play when we are figuring out if it's a gain, a loss, or a wash. The other thing we can do is we can retire a piece of equipment. So it no longer runs, and so we sell it to the scrapyard, and we might get some proceeds back for it, or we might get nothing back for it. And another one is to exchange it. So that would be where we have a truck and we take the truck in and we exchange the truck for a new truck. We do it trade in, and they give us a trade in value for it. And the problems that we're working with, we are either going to be selling the truck, or we are going to be retiring it, or they might call it scrapping it, or they might call it salvaging it. We will not be doing any accounting for exchanges, okay? So when we get rid of an asset, no matter how we get rid of an asset, we need to debit accumulated depreciation in order to clear that account out. And then we need to credit the asset account to clear that account out. And that's how we get it off of our books, okay? There's more involved than that, but that's kind of the basic premise behind it. Okay, so sale of plant assets. So we have to calculate gains and losses. So the way you calculate the gains and losses is by, and I had shown this previously, and we'll go over it again, but you compare the book value at the time of disposal to the proceeds. So you're comparing what it shows a value in your books after you've brought all the depreciation current to the amount of cash that you're getting. And if the proceed or the cash is more than the book value, you have a gain on disposal of plant assets. If the proceeds are less than the book value, then you have a loss. So I'll give you an example of this. Let's say we have a truck and it's worth $5,000. So the book value in the books, it shows $5,000. We sell the truck for $6,000. So the proceeds or the cash exceed the book value. So we have a truck worth $5,000, sold it for $6,000, we made $1,000. So that would be a gain on disposal. We have that same truck for $5,000 and we can only sell it for $3,000. So the proceeds are less than the book value. So we have a truck worth $5,000, we sell it for $3,000. That means we have a loss of $2,000. So that's a loss on disposal of plant assets. If we have a truck worth, and this isn't on the slide here, but if we have a truck worth $5,000, and I'll put this on here. If proceeds are the same as the book value, a wash occurs. And that means no loss, no gain. So you have a truck for $5,000. You sell that truck for $5,000. The book value and the proceed value are the same. And there's no gain, there's no loss. It's a wash. You break even. You break even is another way that you can say it. Okay. All right. So that's kind of like the rules, and that's on the sheet that I will show you again that we went over before. So we're going to give you a example here. Okay. So on July 1st, 2022, Wright Company sells office furniture for $16,000 cash. The office furniture originally cost $60,000, and as of January 1st, 2022, had accumulated appreciation of $41,000. Depreciation for the first 6 months of 2022 is $8,000. Wright records depreciation expense and updates accumulated appreciation to July 1 as follows. So I want to point out something here. This part here, depreciation, where it says, I want to kind of highlight this here so you know. Depreciation for the first 6 months of 2022 is $8,000. Wright records depreciation expense and updates accumulated depreciation to July 1 as follows. That is the part of the problem where we say to ourselves, figure annual depreciation. Well, they've already figured the annual depreciation somewhere. They're just not showing us. We ask, is the depreciation current? Well, they've already done that. They've asked if the depreciation is current and they said no. So what they have to do is they have to figure out from the last time depreciation was done to the time of sale or the time of disposal. And if there's a gap in time, they need to figure the depreciation, okay? So they've already done that and they're telling us the depreciation is $8,000. So they've already done all that work in this problem. So they're going to debit depreciation expense $8,000 and they're going to credit accumulated depreciation $8,000. That's now bringing their depreciation, accumulated depreciation and a depreciation expense current. So now everything's current. Now they're ready to dispose of the asset. Okay. This is going to take us to the next step, which we also looked at on the sheet that I had provided, and we'll do that again. So we start with the cost of the office furniture. So the cost of the office furniture was $60,000. Okay. The next step is you're going to subtract accumulated depreciation. Now the accumulated depreciation is the total of the depreciation that we started with, the $41,000 plus the $8,000 that we just did. Okay. So it's the total of both of those. All right. Which is $49,000. So if we have $60,000 minus $49,000, that's going to give us a book value at the date of disposal of $11,000. The problem told us that they sold the item for $16,000. So that's what they call the proceeds. So the rule tells us if the proceeds are more than the book value, we have a gain. So in this case, the difference is $5,000 between what the value was and what the proceeds are. So we have a gain on disposal of plant assets of $5,000. So this is below is how you do the accounting for a gain. So you're going to want to have this written down. This is an example of a gain on disposal of plant assets. So you're going to debit cash for the amount of proceeds. And in this case, we got $16,000. You're going to debit accumulated depreciation for the total amount in accumulated depreciation. That means everything up to before you did the entry that you just did to bring it current, plus what you just did to bring it current, everything that's in accumulated depreciation. And that number is going to match what you used up above in the math to figure out if it's a gain or a loss. You're then going to credit equipment for what the cost of the equipment was. That's going to get the equipment books, because remember it's an asset, it has a debit balance, so when we credit it'll clear it out. And then for gain, you are going to credit. So you're going to credit an account actually called gain on disposal of plant assets, and that's going to be for the amount that you gained, right? So that's an example of a gain, and you will want to note that. And that is in our book too. So if you look in your book, you'll see the same problem is in the book, and you can use this problem, or you can use an example as one that you can use to figure out how to do the accounting for the gain. Okay, example of accounting for the gain. Now we look at the same problem. And let's pretend that we sold the item for $9,000 instead of $16,000, okay? So now we're going to refigure from the beginning. So we have a plant asset worth $60,000. The cost of the asset is $60,000. We subtract the accumulated depreciation, which was the $41,000 plus the $8,000 we just did. That brings the accumulated depreciation to $49,000. We subtract $49,000 from 60, and that gives us a book value at the date of disposal of $11,000. We're then going to write down the proceeds, and in this case, the proceeds were $9,000. And the rule tells us that if the proceeds or the cash is less than the book value, we have a loss. So in this case, the book value is $11,000. We have office equipment worth $11,000, and we sold it for $9,000. So we lost $2,000. We have a loss on disposal of plant assets. So below is how we do the accounting for a loss. So for the accounting for the loss, we're going to debit cash, $9,000. That's for the amount of the proceeds. We're going to debit accumulated depreciation, $49,000. That's to clear that account out. We're then going to debit loss on disposal of plant assets. That's the account title for the amount of the loss. And then we're going to credit equipment, $60,000 for what we paid for the equipment, the cost of the equipment, to clear out the equipment account. So this one right here is an example of a disposal with proceeds and a loss. Disposal with proceeds and a loss. Okay. So you have that. So now you have an example of a loss, and you have an example of a gain. And you will see these on page 916 in your book. There's examples either the same as this or similar to this in the book. Okay, so I'm going to stop the video there, and then we're going to do a problem.